the data on inflation in the European Union surfaced, indicating a marginal decline that exceeded economists' forecasts. The EU Harmonized Index of Consumer Prices, HICP, increased by 2.6% year-over-year. In contrast, the year-on-year increase in the core HICP was 3.1%, exceeding the expected 2.9% but falling short of January's 3.3%. European and US yields also increased, supporting Euro-USD bulls. Investors expected interest rates to decline by 90 basis points in 2024, with the first reduction likely in June. Analysts at Commerzbank and Nordea anticipate that the European Central Bank, ECB, will gradually reduce interest rates in anticipation of forthcoming wage increases. On the other hand, Thomas Barkin, the president of the Federal Reserve Bank of Richmond, expressed a hawkish stance by recommending a measured approach to reducing interest rates. Barkin emphasized the criticality of relying on consistent economic data before implementing policy modifications. Euro-USD went sideways after forming the descending channel breakout. Moreover, the latest bullish daily candle closed above the 20 and 100-day SMA levels, suggesting a possible bullish continuation. A daily candle above the 1.08 static level could signal a conservative long opportunity in this instrument, targeting the 1.10 level. However, the 1.07 level could work as a strong base, and a bearish recovery below this line could lower the price.